We will be looking at an example of the calculation of the taxable portion to be included in taxable income of a travel allowance. Penny owns a convertible sports car which she uses both for private and business purposes, and she traveled 21,000 kilometers in the car from 1 September to the end of February during the current year of assessment. And Penny kept an accurate, detailed logbook of all her traveling, and she traveled 6,000 kilometers for business purposes, so the balance will be for private. And Penny kept record of her running costs of the convertible sports car, and the running costs excluding wear and tear, and finance charges from 1 September to the end of February amounted to 27,024 Rand, and the finance charges from September to February was 22,413 Rand. The convertible sports car cost Penny 359,584 Rand, including VAT, when she purchased the car the previous tax year, and Penny received a travel allowance of 33,000 Rand from 1 September to the end of February. At this stage, I want you to stop before carrying on with the presentation and attempt the example on your own so that you can later compare it to the rest of the presentation in order to see whether you understood all the work you have studied. In order for the employee to be able to deduct business-related travel expenses from the travel allowance, the employee had to keep an accurate logbook. If there's no accurate logbook, no business travel expenses can be claimed as a deduction. So it's very important to keep that logbook. And then the expenses can either be based on the actual costs the employee incurred or the deemed costs per the deemed cost table, which we will look at next. So here's the information of the example again, but at the bottom there we can see that she received the allowance from 1 September to the end of February. So that is 6 months, but we have to use days. And at the bottom, the calculation of the number of days is done, which is 30 days for September, 31 for October, 30 for November, 31 for December, 31 for January, and 28 for February, which then gives you a total of 181 days out of the 365 days for the year. Now we'll be looking at the calculation of the cost per kilometer. We're starting off with the actual cost. You can do actual cost or deemed cost first, it doesn't matter. And we prefer you do the calculations on the body of your solution and not in a note, because that just makes the marking process easier. Right, so we start off with the wear and tear. So we know the cost of this vehicle is 359,584 Rand, including VAT. Now the total cost of a motor vehicle is limited to 665,000 Rand. If the vehicle costs more than that, say for instance 700,000 Rand, the calculation of wear and tear will be based on 665,000 Rand and not 700,000 Rand, because that's the limit. Then we divide it by 7 years, the cost, and that's a fixed number in the Act. So you always use 7 years, and we have to apportion it because she received the allowance from 1st of September until the end of February. So you apportion it with 181 days and divide it by 365. That gives us 25,473 Rand. And the finance charges that related to the period September to February, so we don't have to apportion that, 22,413, and the same with the running costs, no apportionment, 27,024. That gives us the total costs of 74,910, and that then have to be divided by the 21,000 kilometers that was traveled between September and February. And that gives you an amount then of 3.567 Rand per kilometer. Now we're looking at the deemed cost per kilometer calculation, and the determined value of Penny's vehicle is 359,584 Rand. Then we go to the deemed cost table. So at first it's the value of the vehicle including VAT. It's always including VAT. And the fixed cost is the next column, which is a Rand value, and that is per annum. And then after that the fuel cost, which is cents per kilometer, and the maintenance cost after that also cents per kilometer. So now you must go see where the vehicle slots in the table. In that bracket between 285,000 and 380,000, then we see the fixed cost is 96,197 Rand. The fuel is 171.8 cents per kilometer, and the maintenance is 61.5 cents per kilometer. We're looking at the calculation of the deemed cost per kilometer. So everything here must be converted to a Rand per kilometer figure. The fixed cost in the table is given as a Rand value, and the fuel and maintenance is given as a cents value. So the cents then also has to be converted to Rand. So the fixed cost was given as 96,187 Rand, and that you have to divide by the total kilometers that was traveled during the period or year, which is the private and the business kilometers together, which was 21,000 kilometers. So that you divide then, and if it was received for a full year, your calculation would stop here. But now in this example, it was received from September to February, so it has to be apportioned. So the days in that period was 181 days, and that divided by 365 days for the year then gives you a figure of 2.271 Rand per kilometer. Then the fuel was 171.8 cents. So divide that by 100, then you get 1.718 Rand per kilometer. And the maintenance was 61.5 cents. Divide that by 100, then you get 0.615 cents per kilometer. Then you add those all up, and you get a total of 4.604 Rand per kilometer for the deemed cost, and that compared to the actual cost, which was calculated as 3.567 Rand per kilometer, is then more than the actual cost. So we will use the deemed cost, as that will be more beneficial. Now we look at the calculation of the inclusion in taxable income. So the travel allowance that was received was 33,000 Rand for that period. Then we calculate the business travel cost. So the business travel was 6,000 kilometers, and that is multiplied with the deemed cost per kilometer, and that was 4.064 Rand per kilometer. And that then gives you a total deduction of 27,624 Rand. And what then is included in taxable income is an amount of 5,376 Rand.